welcome to the $1 Billion Podcast, a weekly show about the entrepreneurial journey and making it big in any industry. We're your hosts, Joe White and Kane Daniel. Welcome to the $1 Billion Podcast, where we explore the journeys and strategies of top entrepreneurs from across industries. Today, we have a guest who's been at the forefront of Canada's mortgage industry for over 15 years, Kyle Green. Welcome, Kyle.
Happy to be here.
Fantastic. As the owner of Origin Mortgages, a brokerage with over 40 agents and $1 billion in annual funded volume, and the head of one of Canada's top 0.01% performing companies, Green Mortgage, Kyle is a master at securing financing for real estate investors and high net worth clients. He's a best-selling author, keynote speaker, and a trusted voice in national media. So Kyle, maybe we can start off with you sharing your personal journey from starting in real estate investing to becoming a self-made millionaire. What was that journey like for you?
Yeah. So I was a C average student in high school, didn't have much going for me. And I ended up going through college, finding that I was really into finance and managing people. So I was in college, just working at Tim Hortons as a supervisor, and I had that path of, I could become a manager and do that. But I really was more interested in finance. So I remember I had an accounting teacher that after class told me, by the way, my brother has a Porsche and a yacht, and I asked him what his brother did. Stockbroker. I'm going to become a stockbroker. So I started applying everywhere I could. I ended up getting a job at Westminster Savings Credit Union here in BC. I worked there for about 5 months. The unionized environment crippled my soul. And I ended up talking to a friend of mine whose parents were mortgage brokers. And she literally told me over MSN Messenger, like, I think my parents are looking for some help doing some mind-numbing paperwork stuff. Like, okay, I checked it out. I don't think they really thought much of me, or at least weren't expecting much out of that conversation, because my friend was the rebellious daughter out of the three daughters. And so the older two already worked in the business and whatnot. But of course, the rebellious daughter comes and says, hey, I've got a friend who wants to work for you. I don't think there's much of an expectation. But yeah, I got into it when I was 19 years old. And I remember them telling me, brand new mortgage brokers are making 50, 60 grand a year, et cetera. And I thought that was pretty cool at the time. But I was more excited about the $100,000 plus a year prospects and ability to do that. And so, yeah, that's how I got started. Got started pretty early, fresh.
I know it's just a little soundbite, but I love that you mentioned the C+ student in high school. I think that will resonate with a lot of people. Myself, I resonate with that because I didn't have a lot of motivation in like high school, for example. It was only the same thing when I went to university that I started to understand the real world's scenarios and what this could look like, and started to find what I was passionate about.
What they teach you in school is to be an employee. They set you up for being an employee, working for somebody, making an hourly rate or maybe a salary, but they don't show you how to build wealth, right? That's
yeah. C average student in high school, and then going to college, I became like a B. I think it was a B+ or A- average student. So very good, because I was actually taking classes I was into. And I ended up, after becoming working in the broker industry for just a few months, I ended up actually dropping out of college to do this full time. But I believe that obviously there's some benefit to going to school full time and getting that degree, but there's also a different way of looking at it. I spend a lot of my free time on YouTube looking up videos on my business needs a better marketing approach, or I need to be, better at this or better at that. And so I think viewing school as less of a 4 years after high school thing, and instead of looking at, at more of a lifelong approach of educating yourself and learning. And looking at what you need to learn in that moment. What books do I need to read, and what YouTube videos, or whatever your method is of learning. So yeah, more of a lifelong learning expectation, I think.
Really important message, especially for anyone that's at that point now thinking maybe this isn't for me. Maybe this do well in high school. I'm not doing well in school. I'm not enjoying it. It doesn't mean that you can't do it, and it doesn't mean that you won't do it. So I think that's an important message. I do have a question. You mentioned book. I wanted to ask you about your book, because you mentioned, we know best-selling author and rockstar real estate investing, expert advice for making your first million. Maybe tell us a little bit about What inspired you to create that? What was the process like? How has it been so far?
Yeah, for sure. So I was actually the idea was not mine. It was actually a friend of mine's. So we were at a function and hanging out, and he said, "Hey, let's leave this function." And it was a mortgage function. I don't remember which bank it was that was hosting it or whatever. He said, "Let's go back to my place. Let's play some NHL on PlayStation." And he's like, "I bet you I can beat you." I'm like, "No, you can't." And he did actually beat me. So I owed him $50. Afterwards, we're having a glass of wine in his kitchen, and he said, "So I've got this really good idea, or this cool idea, where this thing called Book in a Box, it was called, where it would be like 25 grand all in. They would help you write the book and do all the publishing and everything." And I thought, well, a book is a really great idea. 25 grand is a bit steep for one person, but for two people to split and to share that cost, that makes a lot of sense. And it's a great way of positioning yourself as an expert in the field. And so we ended up writing a book together called Rockstar Real Estate Investing. And we kind of went through a bunch of the different chapters and things that we would want to discuss. And then each of us wrote our own chapters, so to speak. And then what ended up happening is the way that they would publish it is you would write it out, they would read it, and then bring it down to their basic knowledge from outside the industry, which is actually really helpful, because I remember learning that people like the news is basically at like a grade 7 level for their English. And so it's somebody that's not in the industry rewriting basically what you've written in their own words, which is really, really helpful. And so I found that it's a really great way of establishing yourself as an expert in the field. And I've called it now my expensive business card. When somebody asks, "Oh, what do you do?" or whatnot, I often give them the book. And we've also involved it and incorporated it into our process as well with our office. So now every application that comes in, I now have somebody who's interested in working with us, and we have their mailing address. And now we put it, I sign a copy and then pop it in the mail and send it out to the customer, which is one way of ensuring that, that there's some value added to the conversation, past just getting them the mortgage.
That's very cool.
Yeah.
Yeah. Maybe tell us a bit about what's in the book.
Yeah. So we wrote in a number of different chapters, but it's basically foundational items about real estate investing. So my past and how I got started really was, going way back to 2008, starting to work mostly with real estate investor clients. That became my niche. And so after doing presentation after presentation, you start to drill down the core fundamental ideas and items here that you look at. One of the first things is, why invest in real estate? And you want to look at the returns in investing in real estate, usually when you're asking that question. And you generally make money in three ways in investing in real estate. There's the cash flow, mortgage pay down, and the appreciation factor. Generally speaking, with 20% down payment, it's hard to find much that cash flows with high interest rates, especially if you're looking in BC or major urban centers in Ontario, et cetera. But you'd have the mortgage pay down, which is something that people don't think about. But generally speaking, the mortgage pay down return on investment usually is anywhere from about 5% to 9%, depending on the interest rates at the time. So basically, if they have no cash flow, no appreciation, your tenant paying down your mortgage for you is between a 5 to 9% return on your capital, which is already comparative to what you get if you just invested it in the stock market. But then the real money is usually on the appreciation factor. So if you put 20% down, that means that your money is leveraged 5 to 1. So buying a $500,000 property, you put 100 grand down. Now, if the property value goes from 500 to 550, which is a 10% increase, your return on investment is not 10%, it's actually 50%, because you made 50 grand on your investment of 100 grand. And so this is the real key that we try to teach, just to get people to get started in it. And then we start to look at different strategies. So investing in cash flow properties. We looked at doing flips, and then one of the most popular chapters in the book was called the $1 condo, and it basically talked about how you could buy the property, renovate it, and then refinance and take out all of your money. It's another common verbiage for that is called the BRRRR strategy. So buy, renovate, rent, refinance. So that's what a lot of the other podcasters, et cetera, are talking about now. But that was one of the most popular chapters in the book for sure.
Yeah, no, that's really cool though about the investing. So as a strategy, you give that out to potential clients. Do you normally? So do you go looking for real estate investors? Is that your primary market?
Yeah. So I think at the end of the day, as a broker, we need to find ways of adding value to the conversation. And my target and my focus has always been to add value by talking about how you can build wealth in real estate, and using real estate. So, even if it's somebody who's not currently investing, you can say, by the way, I can help you build your wealth in real estate in other ways. So buying your residence is one of the obvious ways of doing that. But also you could invest in real estate, and here's some more education that you could go down. And sometimes you don't know. Sometimes a first time buyer is actually buying this home, but intending on buying another property down the road very shortly. And then that means that the strategy should be different. Should you put 20% down right now, or should you just do 5% now, and then save up your other 5% and then buy a new residence for yourself shortly after, right? So I think it helps to ask and understand what the future of your future objectives are. And if you don't ask that question, then you're kind of missing out on that opportunity to add value. So a lot of it comes down to some more tax planning, and not that I'm an accountant, but you end up learning a lot about that when you're working with investors, I just always found that it's easier to add value to the conversation with working with investors than it is in many other areas. But it also has come with a cost. I also have found that as I've tried to scale out of my own business, it's become very difficult too, because the level of expertise is very high, and it's hard to find people that can replace you in discussing tax strategies and all that kind of stuff too. So, yeah.
So in trying to scale up, you have about 40 agents now?
Yep. Over 40.
And you're doing about $1 billion a year, which is fantastic. Kudos. That's amazing. So do you find it difficult to bring on new agents who have the ability to do this type of business?
I mean, I've hired and trained a lot of brokers in my career, and it's tough. It's very difficult. Only a certain percentage of them will actually, be a successful mortgage broker. Probably 1 in 5, 1 in 10. I think it's only 1 in 5 renew their license after 2 years, right? So that's just renewing it. Not to mention the people that actually, perform and start to do, 10 million plus a year. It's probably 1 in 10. I would say the traits that I'm looking for when I'm looking at bringing on a broker is you have to have one of these two items, ideally both, but you either have to have a pre-existing network of people that are interested in doing business with you, or you have to be absolutely dogged in finding people that will be willing to work with you. And you have to have one of those two. So if you don't already have a large base of people that are interested in working with you, and that could be a social sphere, that could be a professional sphere that you accumulated through previous work or whatnot, but one of those two. Or if you don't have that existing sphere, then you have to be willing to do whatever it takes to grow that. And you have to be willing to meet 5 to 10 people a day and just grow it that way. Everything else kind of falls through is an aside. If you can be good at underwriting, sure, you can do all these other things, but it's a lot easier to support people that are bringing you deals than it is to support people that aren't willing to go door knocking and do the grind,
Absolutely. Now, when it comes to interviewing people, Kyle, and trying to determine if they have that ability to go out there and generate that business, if they don't already have a network of people who want to do business with them, how difficult do you find that to be able to tell if somebody's going to be able to do that?
Yeah, good question. I've been wrong for sure. Sometimes people surprise you in either direction. Unfortunately, usually the surprise is that they're less successful than you were hoping that they would be. That's just the reality of it. That being said, I think one of the things that I often ask people about in the first meeting is, what are your goals and objectives, and how big are those goals? Because if they have small goals, then they probably won't be willing to put in a lot of work, because they don't think that small goal requires a lot of work, but it still does. First of all, and the second of all, I think, is asking them, what is your strategy? And most of the time we hone in and we tweak that strategy a little bit, and whatnot. But I think one of the things that we look at is, do you have an idea of a strategy coming into this? Have you thought about where you're going to get your clients from? And if they haven't really thought about that, then there's always a certain level of concern, where if they have an idea or thought, even if it's not maybe the best idea that I would suggest, at least they've given some thought to like, where am I going to get my clients? Too many of them think, oh, I've got a friend who's a realtor and my parents' mortgage is coming up for renewal next year. It's like, okay, like your friend that's a realtor probably doesn't want to have their 5-figure commission check riding on your on your inexperienced lap, right? They just kind of assume that they're going to get the business, but it's not like that.
Yeah, no, 100%. That's it seems like that's the type of attitude in the life insurance industry where it's, you have your own policy, maybe a couple of family members' policies, and then if you don't make it, the insurance company's happy, the agency. But unlike that strategy, this strategy really, you need to be able to help them get where they need to be and realize that business strategy that they have. And when somebody comes to you, what would you suggest to them is the number one, maybe a couple of traits? Because I know obviously one of the traits is going to be, you have to be dogged and go out there and really go after that business. So what would be a few traits that you would suggest to somebody to be successful in this industry?
Yeah. I think that developing and creating a plan and then sticking to it, and regardless of what the outcome is, you have to just keep going and going and going. I think that that's really important. You have to be okay with no. You have to be okay with that. And I think that I find a lot of people are very nervous to just pick up the phone and just start to dial people because they don't want to be asked a question that they don't know the answer to. And the reality is you don't learn unless you put yourself in those positions and situations. So you have to just do it. And you have to be okay with not having the answer. And most people are okay if you don't know the answer. You say, that's a really good question. I'm going to get back to you on that. Or if you need to, you can always say, oh, no, yeah, that's a great question. I'm going to send you a link right after our call that's summarizing the things that we talked about. I'm going to send you some more information that you can digest about that later. And so I find as a salesperson, you start to get really slick with being able to answer things that you don't know, in a way that makes it look like you're still in the driver's seat. But I will say one of the most important things that we do when we onboard a new-ish broker is we send them a spreadsheet, nothing fancy, by the way. Sometimes it's like, oh, what CRM should I use? It's like a spreadsheet's fine to start. Just start with that. But fill in the spreadsheet and fill in every of these details. So some of the columns we have is, obviously name, phone number, email, so contact info, but then also what kind of employment type are they? An employee, self-employed, et cetera? Do you have any idea what kind of income they might earn? Do you know if they own a home or if they rent? If they do own a home, do you have any idea what their mortgage amount is? Do you have any idea when their renewal is coming up, et cetera? And just basically all these fields that you can fill in. And once you have that data and information, we sit down and go through the information with the broker and say, let's try to identify a current niche that's available to you. So if I sit down and I say, hey, I noticed you have a lot of people that work in the tech industry. Oh yeah, I used to work in tech. Okay, cool. So you have a bit of an in with those people. So why don't you start off with doing some lunch and learns about how to buy your first home for tech employees, right? And then you're going to focus on all the little nuances that are relevant and important. So you're going to figure out which lenders will use stock option income as if it was regular income, and which lenders won't, right? And so find all the little value points, the questions that these people are thinking before they even think about it and ask the question, and position yourself as an expert in financing these particular people. It could be that, hey, a lot of your clients are self-employed. You should focus on that niche, and here are the 3 things you can do. And going through that and noticing that, a lot of people that own homes already, great. Let's talk about what you can do for them with regards to the renewal coming up. Just finding basically opportunities. And I think one of the things that I'm trying to do effectively in that call is going through person by person and identifying this person. I see that they're this and this and this. Call them, and this is what you're going to position. You're going to explain that this is the value proposition in working with you. This person, it's a bit different. They are an employee and they don't own yet, so you want to let them know you have a rent versus own spreadsheet. You can run the analysis and see if it actually makes financial sense to own or rent. And each person's different, because I think that you're trying to remove the concern and the hesitation from just picking up that phone and just dialing these people.
Absolutely, that makes total sense. That's a great outlook on how to overcome that fear of picking up that phone. So I think you're right. A lot of people that come into the industry have that fear of, I don't know what to say. I don't know how to answer that question. And for me, being in the education side for going on 30 years, I learned early on that we have a parking lot, and it was like, a question comes up, you know what, that's a good question. It's outside the scope, or I don't have the answer to that. I'm going to put it in the parking lot and then address it after. So any type of strategy like that doesn't throw you off your game and keeps you talking about what you know about and then defers what you don't. I think that's a brilliant strategy for sure. Want to switch gears, Joe, though, just for a moment, and ask you what you find most enjoyable about your career.
Good question. There's a couple parts or a couple components to that. So as a mortgage broker, what I really like is solving really complex puzzles. And unfortunately, those puzzles often take a lot more time and don't necessarily make you more money, but I do really like that. It's nothing better than being able to come out of something and thinking, holy cow, I completely changed this person's portfolio, their situation. I took this mortgage and refinanced with that lender. At the same time, I went to this lender. And then because now each one of these is not stress tested according to the other lender, I can make the numbers work. And then I do this, and coming up with a crazy puzzle and a solution to it that would be very, very difficult for anybody else to come up with is something that keeps me engaged in the mortgage industry itself and doing deals. And it also has become why people come to Green Mortgage, I guess, for financing, is because we do the complicated stuff that people struggle putting together, and that market is less rate sensitive too. So I'm not worried about making full compensation because my value is very clear. I'm getting them a mortgage that was not attainable through whoever else they're dealing with, their bank or somebody else. So I think on the brokering side, that's what kind of keeps me engaged. But I think if I zoom out and look at it from a much broader picture, I've always just been a really big fan of business and building a business and growing a business. And so for me, like I hired my very first employee when I was 21 years old. And so I've been always about that. I've always been really into trying to build a business. And the main objective for me is trying to figure out how can I take this business and move as much away from being a service-based business into more of a product-based business. And our business will never be a full-on product, by the way. But I'm just trying to, everywhere I look, can I bump it a little bit more, because in my opinion, that's how you create a scalable business that relies less on the agents themselves. And so with Green Mortgage, we're big on systems, big on processes, big on updates that go to the clients and all of these little things. And so I'm always looking at the process and how we enhance that. Owning a brokerage is more scalable as well, because you say, okay, this person is going to help with these things. So we have a trainer that helps with, the more basic questions for the staff. And we have somebody that works on the IT and technology department. If you have questions about the system or the process or anything like that, you call that person. And if you have a really complex deal, if you're getting sued by somebody, you call me, so you kind of separate things and you create a business model and structure. But I'm all about a system and a process, and I really am engaged when I'm building those types of things and finding the most efficient way of getting a deal across the finish line, but also in how do you enhance the customer experience in the best possible way. Because I think that if you can enhance the customer experience in a way that it doesn't rely on whether they got you or not, especially as you grow your business, then that's really what I'm in it for.
So when it comes to your position about solving these puzzles, I guess where do you see that fitting in the future as AI takes a larger role in processes? Because really what it sounds like you're saying is that it's about a relationship. You're developing a relationship. You're giving them some personalized advice. But on the flip side of that, you want to be able to scale. So how do you find bringing those two aspects together?
Yeah, good question. So my journey immediately, and I don't think you know this, Joe, but just in the last probably 6 months, one of these projects that I've been working on is really starting to take off, and it's called Atlas. So it's actually a mortgage underwriting software. So my thing that I was always really, really good at, and it comes back to solving those puzzles, is underwriting. And so being able to take a deal and figure out where that deal fits. And so I've actually had what has been a spreadsheet turn into software. And the spreadsheet initially was just enter in the information, and then it would just make the lender worksheets for every lender. So I could just input the, surplus or deficit and whatnot into Fallagix or Velocity. And then eventually the spreadsheet evolved to, what about lenders with rental offsets? Let's add that in. And then, what about putting the borrower's income and expenses into it? And then when lender policies would change, I'd have a formula bar that was so big that my eyes would go cross-eyed. And anytime lender policies change, I'm like, oh man, what's going on here? I don't really remember. So then I got rehashed with a whole tab that had all of the lender policies in it. And then I could just change and tweak a little box. And then it would recalculate and recalibrate the entire worksheet to be accurate moving forward. And then eventually it's like, this should be software for everybody. And so we've actually been on that journey. And so again, going back to service to product, and now building a mortgage product that I think will be able to enhance the process for brokers. So now you enter in the deal once and underwrites for all the lenders for all their products simultaneously. So you don't have to put in what the home equity line of credit payment is. You just put the limit in the balance. You don't put the rental calculation or rental percentage. You just put in what the rental income is. And then it calculates for all the lenders for all their products, including net worth and corporate net income and all that complicated stuff. And then you can create a quote right from the system, because you can go select, click, add to quote, and then send a quote to a customer that pre-fills in all the prepayment privileges and penalties, and it will calculate, the penalties in year 1, 2, 3, 4, 5, et cetera, all that stuff automatically. So I think we can enhance the broker efficiency and enhance the broker's how the client is viewing the broker and the experience that they're obtaining, because the broker is able to shop more lenders and deliver a better product or service overall with that. That's our journey right now.
Yeah, that's amazing. Are you going to, or is it already in market? Like, are you offering this to other brokerages, or this is primarily for your own brokerage at the moment?
The thought, of course, came like, should this be just our brokerage? But no, we decided this. It's a massive undertaking. You have to keep track of every lender's rates daily to underwrite, be accurate. You have to keep track of all the policies. And when I say that, when looking at policies, our spreadsheet in the back end that is managing and tracking all of these policies, there's always over 600 policies that you have to map out and match properly. So it's actually quite insane how much is going on there. So we actually just launched a couple of weeks ago our a very early stage small launch, and so it's kind of an invite only. If you do want to get invited, you can reach out. I'm not saying that for a sales pitch, by the way, but the product, when you launch software, something that's very different than being a mortgage broker, is a different business. So your first launch is always something that is not where you see it in a year or two. It's something that is, it's getting there, it's moving in the right in certain directions. But one of the keys that you need is feedback from users to say, what is it missing? What should we be adding? What's most important to you? Because here's what's on our docket for a roadmap, but what do we do first, right? And so we're kind of looking for early adopters that want to be early stages and be part of what we're going to build. Because we find that a lot of software businesses, they do quick pivots. They say, okay, this is what we've launched, but actually this is what users are wanting. And the direction that we take is going to be based off of what users are requesting, not what I think is best, right? So it's launched, and we have an introductory rate for those individuals that are starting off and being part of that group. So there's a benefit to being early stage with us, and also just some people want to be part of changing the mortgage industry. I think this will fundamentally change how we do business moving forward.
I think you're right, and the fact is, technology is a friend, right? It isn't going to replace us. It's a tool that we can use to give better advice than anybody possibly can at a bank with only one product. So yeah, that's amazing. Kudos to you on that, and wish you all the best and on that frontier, and maybe I'll bend your ear after we're done and see about getting involved in that. I know you don't have a crystal ball. None of us do. But based on your experience, where do you see real estate investing going over the next 5 to 10 years? I mean, do you think it's? I've always thought of a good strategy for somebody who doesn't want to have a portfolio in having real estate investments, to at least have their principal residence in one investment. And that way that gives them a lot of options when they retire. They still need some place to live, but the other one should be paid off. And so where do you think real estate investing is going to go in the next 5 to 10 years with all the changes that have been made?
Yeah, good question. I will say I think that it's going to change in a big way, and it has started to. I'll say that my book of business from the investor front has been very quiet for the last 2 years, and particularly because interest rates have risen so much, and investors, the money, it's kind of like a circuit board. Money always flows to the path of least resistance with the highest return, right? And real estate investing has not been that path of least resistance. In fact, a lot of my investors have said, yeah, you know what, Kyle, I'm not really buying anything. GICs are pretty good right now, which is sad to say, but a risk-free investment making 5.5% return in a market, in an environment like this, seems pretty darn good, right? So I have seen a lot of people have kind of tapered off on that, but I do definitely believe in real estate investing. But if I look at what the government has been doing lately, they have been absolutely hammering the ma and pa investor who wants to buy a couple of residential properties. The number of rule changes and legislation passed. A lot of our investors a few years ago sort of transition into, let's do short-term rentals because there's more cash flow there with rising rates. And then the BC government comes out and hammers that and closes that door. It just seems like no matter where you turn as a smaller investor, the government keeps closing the doors, and they're really trying to discourage smaller investors, which, I mean, that's another conversation for another day, but it just seems like another opportunity to close the door on the middle class individual, which is, a much larger macro problem in my opinion. However, I do think that what's going to happen is, if you look at what the government is incentivizing, it's CMHC insured multifamily property. And the problem is, for a lot of smaller mom and pop people, they don't have the capital to do a $5-10 million building where there's economies of scale and everything. And you can get lower interest rates by doing that, higher loan to values than residential, et cetera, for the right properties. So in my opinion, I think that the future may be involving more investments into private equity funds that are doing raising capital for larger projects like this. And I think that that's probably where a lot of the money is going to be going, is be a smaller part of a bigger property where they have the economies of scale and where the government is incentivizing that, as opposed to disincentivizing the smaller stuff where you own it 100%, but you're not getting the economies of scale.
So you think things like limited liability corporations might become more popular, where they have investors that invest in a development that's CMHC insured because it's multi-residential?
Yeah, 100%.
Okay. Yeah. It's interesting, right? Because with the like, especially in Ontario, with the way syndicated mortgages went, and, they got a horrible rap, rightfully so, from the ones that were doing it improperly. But, at the end of the day, a syndicated mortgage is just a mortgage with more than one investor on it, which has always seemed to be a good idea, to be able to pool funds and build these types of properties that we're so desperately in need of right now. So that's interesting. So do you see a market in helping those types of investors from your own business?
I do, yeah. So more of my clients are interested in getting CMHC financing. I think one of the challenges I find, anyways, is a lot of those investors are still at that small to medium sized stage, and they want to start to get into that type of property and that type of deal. They're just still a bit too small, and they're hearing that, I can get CMHC insured financing, 95% financing, lower rates, 50-year amortization. And, these realtors in some cases are saying, hey, there's 4 duplexes all side by side. So there's 8 units in total. You can get CMHC financing on this, but it's only, $2 million or $1.5 million of real estate. Really hard to find CMHC lenders that will do sub $5 million loans. So it's an underserved market right now, I think. And I think that we need to figure out, is there a lender, are there brokers, or et cetera, somebody is willing to pick up the slack and pick up that little middle pocket, because if nobody's willing to finance those, then it's still not going to, present the opportunity that people are looking at. And again, it circles back to, okay, well, I guess you're probably just investing in somebody who's going to do a bigger deal, and you just are a money partner only, right? But people don't like that. One of the reasons that people like real estate is they like the control aspect. They like to just be in the driver's seat, and doing those type of deals takes that element out of it. And so I'm not sure how that transition will happen with those that have had some success with residential investing themselves.
Yeah, that makes a lot of sense. So the way things are going, and um, the way you're looking at the future, what do you see for yourself and for your business in the next several years? What are your plans?
Yeah. I mean, I do believe 100% in Atlas, and I believe that that's something that's going to change the way that we broker. And I think that that's a major focus of mine, is integrating that into my own business and ideally other brokers' businesses as well. And I think that that's just, Joe, the number of times that I talk to people outside the industry, especially tech people outside the industry, and we explain what we do and how we do it. And then they say, sorry, what? You this doesn't exist already? Like you have to manually enter in and change and tweak all the numbers yourself, and you have to, search your email box and find TD's broker kit and control F and find the thing inside of there, and there's 89 results, click, find what you need, type in the HELOC payment. Okay, next. Oh, it doesn't work with TD. Darn it. Okay, now go to the next lender and go over and over and over again. And it actually creates a conflict of interest too, because what if 3 lenders deep, you found a lender and, okay, great, I found a bank, it's Scotiabank, let's say. But what about if there's a lender 8 lenders deeper that actually had a better rate for the client? Maybe it even paid the broker more or whatever. But you never got there because it would have taken too much time. And I think that we need to look at, how do we remove that conflict of interest from what we do as mortgage brokers? And as somebody that I take a lot of pride in being really good at underwriting, I surprise myself all the time when sometimes we look at a deal like, it actually fits better here. This deal actually fit with MCAP, and I wouldn't have guessed that the client with 7 rental properties fits with MCAP best. But the way that the numbers and the math worked, it makes sense now that I think about it. And that I think that's something that's needed. I think seasoned brokers need that to improve efficiencies, because we have so many more requirements in FinTrack and everything coming down the pipeline. It's just really trying to, how do we become more efficient? And then newer brokers, how do we improve the quality of the work of new brokers entering into the business? So yeah, that's my primary focus, I think. And then, building off of that, how do I make green mortgage more scalable with or without me, creating processes and systems to enhance the customer experience, regardless of whether they're getting me or getting somebody else in my team. And so just trying to replace myself and take what's in my head and implement that into systems and processes and technology solutions, and try to make, by extension, making my own life easier, also making other brokers' lives easier too.
Be nice if you could clone yourself, right?
Yeah. Yes, of course. That would be another piece of technology, Joe. If you figure that out, give me a call, okay?
Yeah, no, I will. I won't be giving you a call. My clone will be giving you a call, because I'll hire someplace in the Cayman Islands or something like that.
Good.
It is fascinating. I remember dealing with a couple of companies. I was involved with one several years ago, trying to automate lenders' underwriting. But at the time, a lot of that had to do with okay, the lenders are going to update it when those things changed. They weren't really into that, and there was a huge technology gap, right? There was nothing there that could make sense of the differences in guidelines, which you're obviously taking advantage of now, and that's amazing, because it is about brokering, right? Coming up with a few different options. And trying to decide which one might be in the best interest, or even providing a client with, here are 3 options that I think fit your profile and your needs and circumstances, and which one would you like? And yeah, that's great. So wish you all the best in that. It's been a fantastic conversation. Is there anything else that you'd like to throw in that we haven't talked about?
No, I guess if you're listening to this and you're a newer agent, don't get discouraged. This last 2 years has sucked for everybody. I mean, just to put things in perspective, my revenues in 2021 versus revenues in 2023. Revenues in 2023 were a third of what they were in 2021. And a lot of brokers are not doing much better in 2024. So I think a lot of newer or middling brokers like, oh my God, what am I doing? This is so difficult. And I've been doing this for Jesus, coming up on 18 years in like a couple weeks, Joe, which is crazy to think about that. But I've been through a lot of cycles, and this one has been tough. Yeah, this has been a tough one. Really, really tough. Who would have thought that rising interest rates would have been really tough for mortgage brokers? But there's very little refinancing that can be done. Renewals are hard to win. Purchasers, just not a lot of them. It's a really tough climate. And so the pendulum will swing. I feel like 2025 is going to be a much better year and to get prepared and get ready for it. But just hang in there. I think it's just been a really tough go for brokers, but don't get discouraged. Just keep on the work, keep growing the client base, and do the hard work that others aren't willing to do.
Yeah, that's great advice. And you know what? That advice goes across industries as well, right? The real estate industry was experiencing the same thing with increased interest rates. And it really tests people's resilience and their dedication to the craft, right? And the fact that you're here and you're thriving and you're working so hard is really a testament to your resilience. So, Kyle, it's been an absolute pleasure having you with us today. I thank you very much. Look forward to, if you don't mind, we want to reach out and catch up with you on Atlas. Phenomenal name, by the way.
Thanks.
And see how that's going once you're past like the beta launch, if that's cool.
Absolutely. Yep. Happy to do that.
I've been with Kyle Green. Kyle, thank you so much. All the best, and we're going to catch you soon in the coming months again. Thanks
Absolutely.
very much.
Thanks, Joe.
Thanks for tuning in to the $1 Billion Podcast. Make sure to subscribe to the show so you never miss an episode.
For more in-depth entrepreneurial insights, follow us on social media, and for more info on the show, go to billiondollarpodcast.com.
See you next time.